Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, January 23rd, 2026. S&P 500 currently sitting at 69.23. I'm David Zarling. I'm here with Weather Mageddon, Ian McMillan. Are you guys alive down in the Carolinas?
Oh, yeah, we're swell. It's just a big FNB, a freaking nothing burger.
Freaking nothing burger.
Freaking nothing burgers.
Those are the worst. Freaking nothing burgers.
Oh, my God, they don't do anything. Get out. Get out. It could be, the snowstorm could be an ADPV.
Yeah.
Could be FNB.
FNB. Freaking nothing burger. Well, I will say for here in lovely Wisconsin, currently sitting at minus 11.
No.
Yeah, pre-windshield too.
In West Bend?
Yeah.
See,
it's
and
cold.
this is why I don't complain, because someone out there always has it worse than me.
You know what I saw on the socials, on the Twitters, on the X this week was that trees can explode when it's cold enough.
Yeah, I saw the sap. The sap expands apparently.
Like
I had to
rapidly
Google it.
freezes and then blows up.
Imagine if you're like a maple syrup farm. Is that like a
Ooh.
big risk to your business?
Could be. That's interesting. I mean, I know it's in spring when you have the freeze thaw process that you get your maple syrup, but yeah, if you don't have syrup because it exploded.
Yeah, because the trees all have a third of your acreage exploded.
Can you imagine what maple syrup futures would do in that scenario? Crazy. But nothing by you? No ice yet? Nothing?
No, nothing. I don't think we're going to get any snow, which is so...
I bet your boys
if
were
we're
looking
going
forward
to do this, do it.
And I feel like your
Let's
boys
do
will
it.
be looking forward to some snow.
Yeah, I think the boys... I probably played that card pretty too hard early on in the week.
Oh, did you?
Yeah, I kind of got him hyped up about that we could be getting some snow.
Oh, you gave some hope and you Lucy'd it.
And now I'm having we're doing the slow letdown.
Well, that's okay. Someday. But
What about the market? Is the market cold?
no.
No. I guess some parts of it might be.
Yeah, some are. But I think, the top-down weight of evidence approach that we use, which is much different than, your, I'm going to call it lazy indexing process, or your bottom-up, where you're on conference calls and balance sheet and earnings. Our top-down process continues to show risk-on behavior. But anytime you have a thesis, I think you said it well before we hopped on here, there's some things that just need to see follow-through. Like, it'd be really nice to see follow-through.
That always helps. Continuing the uptrend helps.
Yeah. The trend is your friend until it ends, my friend. Where do you want to start? What do you want to cover? We're going to cover it all today, Ian. We're going to get equities.
I guess continues to be the biggest storyline. Gotta still be precious metals.
Oh, jeepers, yes.
Another continuation on the parabolic run for the miners. Silver and platinum. Was it silver and platinum? Is it silver and palladium that are the most kind of bonkers?
Well, so silver, gold, platinum, and palladium.
Yeah, platinum's pretty
definitely ripping. And I'm curious on your thoughts on, well, first of all, kudos to you. I know we talked about this a little bit last week, but a manly position in silver, which has been great for our clients. So thank you for that. But when you think about top-down analysis using technical analysis in a precious metals regime, a lot of times you'll see the producers of precious metals or the harvesters or the miners, right? So for example, GDX versus GLD. So gold miners versus gold. Gold miners is it's not necessarily the same thing in silver, right? We're seeing silver outperform silver miners. So on the spectrum of precious metals, and I say that with a caveat because silver miner. So on the spectrum, you got silver miners, gold. Like if you were to look at what's happening on a trend basis and in a momentum basis, I don't want to make it seem like there's things don't line up. It's just interesting to see that gold miners are outperforming gold.
That's a fact. Yeah.
Silver miners are not outperforming silver, but both silver and silver miners are outperforming gold and gold miners, which is completely risk on.
This is interesting. I didn't know. You just telling me that now. I didn't know that.
Yeah. Sorry, I cut you off guard. Like I hit the record button and all of a sudden I'm throwing this at you, and I apologize for that. It's just an interesting dynamic
I need some time to digest.
And I don't necessarily think that that's risk off. It just tells you how strong silver has been. Like silver is, we talk about sigma moves, right? Like the market is normally abnormal. We're seeing abnormal in silver, and that's normal. That's okay. Like I'm not saying that that's a bad thing. But as far as silver miners go, it definitely is, going back to your original point. The precious metal trade is on, and I'll go back to what we talked about last week. I don't know how you get involved at this point.
Yeah, there is no, right? And that's tough, right? Because we've said that for at least a couple weeks now. And we've gone up another, I don't know how much silver is up in the last 2 weeks, but it's probably another 10, 15%. Yeah. Parabolic, for sure.
Yeah, parabolic. And that's okay. And parabolic, I don't know what to tell you when the rocket stops going up. And this is going to be a weird pivot, but I'm going to try it. And this is another thing I'm probably going to maybe catch you off guard on, is one of the guys I'm a fan of on socials is Mike Zaccardi. Mm-hmm. And he pointed out the 5 standard deviation event in Japanese bond yields.
Oh, yeah, that's what the whole, wasn't, because there was a big gap down we were off Monday, but big gap down on Tuesday from the Japanese JGBs.
The JGBs. And it's not, it is something that I think you got to pay attention to, that you have Japanese bonds going out at, because that's always been the narrative fundamentally, is, oh man, interest rate risk, or the debt service on interest rates, Japan is crazy. And I think you now have Japanese 30-year going out to highs we haven't seen in like quite a long time.
What do you look at for that? Do you have a ticker for that?
Yeah, so if you go, you look at 10-year yields, you can look at 30-year yields, like JP10Y would be your 10-year.
Oh, I see. JP10Y. JP. Wow. How about that?
And JP 30-year. So the point goes, are normally abnormal, right? We're seeing a move in silver that we haven't seen in 50 some years. We're seeing a move in Japanese yields that we haven't seen in, I don't know the duration, a long time. We're apparently getting a once in 40-year weather event this week across the, let's call it, east of the Missouri.
Yeah. Are you guys going to get any of that?
Well, we got the temperature part. We got the minus.
The best part.
Minus 40-degree wind chill. But markets are just normally abnormal. That's just part of the gig. When we talk about 1 in 100-year events, we have to think globally. We have to think broad marketly. And here we have 2. We've got silver, Japanese bond yields. Now, if I'm sitting on the other side of this desk observing to what I just said, maybe those are some red flags, because we've been pretty bullish for a while. Our listeners know that, basically since April, May of last year, we've been bullish equities, and any good technician or risk manager is going to be analyzing their thoughts and their thesis out there. And so we have a bullish bias, a bullish thesis. if we were to say, okay, what makes that thesis wrong? Is it precious metals? Is it Japanese bond yields? I don't know, because the other evidence still continues to stack up bullish.
Yeah, people love to say, oh my God, they did this in, I think it was 2024. Was it 2024? Utilities had a good year. Beginning of 2025. People say, oh, utilities are sending a warning. And then all you've heard about for the last 6-9, gold and precious metals are sending a warning. I mean, I don't know. Maybe it was a warning about crypto. So far, it hasn't been a warning about equities. And U.S. equities aren't even the best equities.
Yes, let's talk about that.
I mean, and that theme is continued right through we've talked about it. It had a good Q1 last year, then kind of fizzled out and then kind of came back. But I mean, emerging markets, broadly speaking, just using an EEM, I think has a it's a lot of potential in that chart. If this can, much like small caps, we gotta keep it going. I wouldn't say we're totally out of the woods, but not too shabby.
Yeah, if you were to use EEM versus the S&P, there's definitely something there. And I think what's interesting is I believe the makeup of emerging markets using EEM is heavily weighted towards China.
Yeah, not as much as it used to be.
Okay.
But because I looked at this a couple of weeks ago, I feel like China's down to 27%, and it used to be. Let's see how they have it.
It might have been as high as 50. I feel like
it was definitely about at least 40. I definitely remember it at 40 or in the 40s. China's down to 20. I mean, you've got Taiwan up to 21% now.
Oh, I'm going to guess that's Taiwan Semiconductors.
Yeah.
But it's interesting when you back out Chinese exposure in EEM to see what the rest of the emerging market complex is doing.
And South Korea has been amazing. I totally missed the South Korea. But you want to talk about parabolic charts? I mean, that thing is a beauty. And from a relative basis, yeah, that's what amazes me when I go through emerging markets. A lot of these gold miners, especially the individual stocks, I mean, there is years of potential there because of what's happened since 2011. They've just been beaten down so bad.
Wait, can you expand on that a little bit? When you look at gold miners on a relative basis, is that what you're saying?
Yeah, more so especially the individual names. Big bases.
Okay.
Huge base. I mean, they could run for multiple years.
You're saying the evidence exists, metals and miners higher for longer. And when I say longer, I want to be careful because, silver's move has been historic, and so you could expect some consolidation in here. But from a bigger term perspective, you're saying there's potential here for a multi-year move.
I do wonder where we're at in silver. Are we right? Because November 2010 through February 11, coming off a pretty, at that time, looking at silver, we should probably use silver futures for this. Pretty parabolic. Now, I guess in 03, pretty big move. End of 03 into 04, pretty big move. Chilled out for a few years, or about a year, 18 months. Another big, massive move, 120%. So it does run and consolidate, but when is it? Yeah, when is that? This is really kind of puts both all that other stuff to shame. I mean, this move the last 6-9 months.
Yeah,
pretty insane.
So, can I give you something crazy?
Yeah, I don't see why not.
A crazy thought. Okay, so we're technicians. When you look at silver futures, you can't see this necessarily because those, for the most part, continuously trade.
Yeah.
But when you look at a weekly chart of SLV, the 72 to $76 level that we just skipped over, is that a possibility of a halfway gap? Bringing some technical analysis into this, that's halfway of the move, which is crazy to think about.
That's crazy.
And at the same time, the breakout in silver in November of 1978, that thing went on a run of 592% in basically 2 years.
That's crazy.
We're not even close to that type of move on a percentage basis for silver. I guess I'm bringing up my mind goes towards, wow, this has been an abnormal move. You wonder if it consolidates here, or does just abnormal become more abnormal? Because we haven't even reached the 1.6618 extension of silver futures. And interestingly, we're halfway. And that's where the gap happens. I don't know. Just throwing something out there for people to chew on.
I love it. Yeah,
so,
precious metals, as we said, clearly, it's got all the eyes. Something that doesn't have a lot of eyes. Maybe it doesn't deserve a lot of eyes yet. Let's say is energy.
Yeah, I think that's fair. Energy was a big winner coming out of the COVID crash. It by November of 2020, it ripped and outperformed. But basically, since late 2022, XLE versus energy has been underperforming to the tune of basically minus 43% opportunity cost, meaning if your dollar was to choose between energy, XLE, and the S&P 500, if you chose XLE, you underperformed by 43%. But here we are, first part of 2026, and there's some signs there for energy for sure. What are you looking at in that space?
For sure, the XES, equipment and services, better than XOP. XOP is like what? Exploration and production. Yeah, services. We'll see if it gets going. I'll tell you one I'm bummed. Biotech. Maybe that's just part of, I don't know. Russell's such an enigma because biotech had been pretty good. Stalled out here a little bit.
It had been. If I can just go back to the energy thing for a second.
Yeah.
The clue on this one might be ExxonMobil, the largest of the energy names.
I mean, look at that thing.
Like, that's fresh new all-time highs. You have to paint the picture for our listeners. ExxonMobil in 2022 had gone nowhere since 2007, but heartburn in between. 0% return, massive drawdowns. Then it built a base on top of that base. So between $97 and let's call it 122, that base built for almost 3 years. And now we're breaking out XLMs going out to new all-time highs on an absolute basis.
Yeah, the monthly chart on that is quite something.
Not too shabby for ExxonMobil. And I apologize for pivoting us back there. It's just I noticed it.
No, that's a great point. I mean, maybe I should be long ExxonMobil. What's the relative chart on that look like?
Perking up. So you were talking about biotech.
My disappointment in it, yeah.
Oh, your disappointment in it? And what do you mean as far as like just more recently?
Gotta get going. Put it same with like regional. Like, what are we doing regionals?
Well, and biotech's one of those interesting ones where it's on the verge of new, if I'm using IBB, new to all-time relative highs. Still has work to do, but it's right there. But to your point, KRE, still pretty, I mean, if there was a version of risk management hell, it might be you had to be a regional bank investor for the last 20 years.
Yeah.
Like super hot mess.
Just banks and like, okay, and maybe you just need to take a break. I get it. I'm impatient. I want things to move. I don't know any banks. Kind of disappointed in JP Morgan.
Yeah.
Doesn't help. I know it's not a regional bank. But financials in general, XLF is taking it in the chin again today. The relative chart, the absolute's fine. The relative chart is, they're going up. Financials are going up.
Yeah, you do wonder about JP Morgan on a relative basis. Absolute basis, fine. There's a broadening a broadening formation versus the S&P, right up against resistance. You wonder which way that pulls itself out. But small caps have been nice since the beginning of the year. A little bit of shift today. And wouldn't it be interesting? I would make the argument that for FANG stocks and MAG stocks, your big 7, big 10, some logical support in these areas. And now you have got a island reversal on MAGs.
Just as they get us buying the smalls.
Right. And that's been right because mega cap MAGs have been stagnant sideways since summer of last year. Just as you start to see, and I will admit the markets held up well considering the large cap weakness since summer of last year. But is that about to rear its head again where we see a resurgence in megas again? This would be a logical place. This would be a logical place for that to happen. Time will tell. We'll I think you said it best before we hopped on here. You need some follow through.
Got to see it, which is, I guess, hate to keep asking for it. Hate to keep asking all the time for follow through, but that's how we keep the train going.
Well, isn't that one of the better characteristics in life, in relationships, in work? Somebody that's able to follow through. I don't think that's a bad thing.
Follow through to the upside, yeah.
Follow through, man. And speaking of following through, I mean, we got 1 week to go for the end of January. Can you believe it? 1 month in, 1/12 into 2026.
Are we? What are we looking at on January barometer?
So January barometer, we are
might be up a little
positive on the year a little bit with 1 week to go. Now, next week will matter, but I mean, January barometer it's an important thing to look at. I mean, I know 88% of the time when we're positive in January, the rest of the year is positive, and that makes sense though, right? Like if you're a sports fan, right, the team that scores first, I'm sure there's stats on if the team that scores first, the likelihood of winning. It's got to be the same thing for markets. It makes sense if January is positive, you already come out to a head start, that the idea of the rest of the year is going to be a head start. And we have a mixed bag, right? The Santa Claus rally period was negative. First 5 days were positive. If we could get a positive January, could see a positive rest of the year. I'm not going to complain if we have another positive year.
I don't think anyone will.
What do you think about breadth, participation?
I think it's pretty solid.
Yeah?
I think it's pretty darn solid. Obviously, I mean, the NASDAQ waning, but the NASDAQ's been sideways since Halloween. So I'm not real worried about like the advanced decline line being sideways when the index has been sideways. If the index has been up 10% with sort of the participation metrics looking like they do, obviously that'd be a little bit more divergy, but it's something we have. You look at NYSE, participation looks great. Bullish percent, I think, is back up to like 68. So can you imagine if that, and that's like kind of the highest we've gotten over the last few years, it's around 68. But could you imagine if that got into the 70s?
Yeah. I mean, I know Andrew Thrasher, a fellow chartered market technician out there, this is the longest we've gone without 70% of stocks trading above a 200-day moving average in the S&P 500 since the great financial crisis.
Wow.
So, and that makes some sense with some of the churning that we saw since summer of last year, that we haven't had that. And are we about to get that, like a broadening out? And that goes back to the thesis of, are we actually early on in this bull leg rather than late? Right? Because I get it. Like if you were coming out of the 23 bottom and you weren't exposed to that move, and then you had the tariff tantrum in spring of last year, you might still be on your heels, but there might still be opportunity here.
See, now I feel like after our conversation today, I'd be more on, right? Because what if bullish percent tops out here again in the high 60s?
Yeah.
Then are you, and then that, so then I'm like, okay, then if someone told me that was going to happen, if I time traveled, or someone came from the future and was like, oh yeah, we don't get above 68 for the year, but markets go up. Then I'm like, okay, we just went back to the mega cap thing.
Yes. Yeah. That's a great point.
And if we have so I think if bullish percent gets into the 70s, that helps the small cap thesis. If we peter out here again, then
it was just a 6-month rotation, right? It was just a 6-month rotation,
and
which
we
is
should
wonderful.
be buying this consolidation on the XLK versus S&P chart.
Yeah. And that would be constructive to have a 6-month sideways relative performance of the mega caps and then move higher. Definitely could happen. The other piece is also like, really, I look at it as 4 different scenarios, right? You've got, do we return to mega caps and everything else lags? Is there an actual true broadening out? So everything, which is the most bullish thesis, the megas go, the small caps go, international continues to go. Or do megas continue to lag? The small cap thing peters out, we get a correction. Or is it just narrow and it's megas again? All things are on the table, and it's why we use charts. This is why technical analysis is so valuable.
How would you know? See, this is what I don't get when people say, "Oh, I know the outperform." I look at a table of performance over the last 1, 3, and 6 months, and that's how I know it's outperforming.
It's crazy.
Crazy. You gotta know the behavior around it.
Right. You can literally, using candle charts, observe supply and demand interaction. Like, yeah, using tables. And I love that you said that. Tables versus charts. Charts so much better than tables.
Like, what does that tell you? Okay, aerospace is up 25%. It's the best performing industry over the last 3 months. I'm making up that number, but
right.
Okay, so what does that tell you about? Oh, should I be adding this to client portfolio?
Yeah, it feels like you're doing the little claw game, that game at Chuck E. Cheese where you're just taking the claw and trying to pick at something. I don't think tables tell you anything. Really hard to manage risk with that too, because where if you're using tables, and I should clarify it, just numbers on a screen, not charts on a screen. Like, how do you identify where risk might be increasing? Like where there's an area of interest where sellers have taken control in the past. You really have to be aware of that, and tables don't tell you that.
No, they don't.
So I said we were going to cover a lot of things today. We should probably give a little bit of love to bonds and crypto. What are you seeing in those spots?
Crypto, man. Bitcoin, a little flaggy. Failed. I guess that was over last weekend. We're back below 95,000 or 94, 93, 94. 1,000.
You talking about Bitcoin on Bitcoin?
Yeah, terrible. But again, I mean, hot mess since almost a year now. It's some nice breakouts, but it hasn't been a smooth ride as far as outperformance. Bitcoin now equal to the S&P going back to March 2024.
Yeah.
Actually, I could go back. I mean, you can go back to February 2021. So Bitcoin went from 60,000. Yeah, I mean, a lot of big moves in there. Just
well, then you've got the dollars getting sold hard here.
Yeah, and that still isn't. I mean, yeah, having another rough day today. That's still not doing anything for the cryptos.
Right. Like, so this is a multifaceted comment that I'm about to say. The dollar range expansion, I would call it daily range expansion. Like when you look at the past 2 years of what the dollar's done, this last week of dollar performance has expanded to the downside. And you marry that information with a potential halfway gap in silver. You marry that with what you're seeing out of international. You marry that with the weakness out of crypto. And I think there's a lot of information there. The fact that Bitcoin or other cryptos can't gain traction with the dollar doing what it's done the past week, and then you marry that with what silver has done and what international stocks have done, seems like it's TradFi over DeFi.
Is it really DeFi anymore though?
No, no, that's a great. That's a
Not to piss
great.
anyone off, but I
No,
think that
that's
plot
a
was lost.
that's a great that plot was lost. I completely agree with that because are you trying to tell me that the dollar's not a digital currency? Because I go to the gas station and I don't actually exchange cash. I digitally do. And it's relatively anonymous.
Well,
I mean,
and so what happened, right, is it's another thing where I actually read a good theory on this the other day of, let's say everyone had to put like everything got moved to the blockchain. I'm pretty sure there would be more than the 22 million coins that they're supposed to be out there. Whether it's through
derivatives.
derivative exposure, whatever synthetic exposure people claim to have to an X amount lot of Bitcoins. Yeah, and it's still like I think we talked about. It's just people can say, "Oh, I think you can buy a Tesla with Bitcoin. I think you can buy some stuff on Amazon with Bitcoin." My kid's daycare does not take Bitcoin, unfortunately, nor does the Jiffy Lube person, nor does Harris Teeter. So then there have been some cryptos that have held up where I think Kevin brought up Dash.
Yeah.
Kevin brought up Dash. But yeah, so I know crypto for us, we can, and clients too. I mean, I don't go in the client letter every month. I don't go through like 15 crypto charts. I mean, we talk about Bitcoin. That's probably what 99% of American households are familiar with. And that kind of, I think, suffices is what's going on in crypto. And maybe that changes. Maybe in 20 years, Bitcoin's like the stupid old uncle that never turned anything, and we are buying stuff with Litecoin or Solana. I don't know. You can actually see Solana bounce here.
It's the MySpace of socials. It's the AOL of internet. Bitcoin could become irrelevant, but right now it is the market cap whale.
And it's the most accessible, right? I mean, we can sit here and talk about Dash holding up well, but to your average person, that means not like they're not getting on Coinbase and buying Dash. Their advisor's not trading Dash. Like it's 99% of the world doesn't care that Dash is or Shiba Inu's holding up well. It's not, but
right.
Whatever.
And what does that tell you if it's priced in dollars and the dollar's getting, I'm gonna say the word smoked, like
it is,
and that can't move higher, but yet it's precious metals. Kudos to the metal bugs once again.
What if crypto is just a psyop to get people hating metals,
or it's just a way like
it's useless?
From a first principles perspective, or like the thing that's great about blockchain is real-time efficiency, and I don't mean that from a mechanical perspective. I just mean that from like documenting. I do think there's something to a ledger and smart contracts and tokenization. Like I think tokenization is amazing. I think smart contracts are amazing. But as far as transactional speed, that's really what we're looking for, right? Like we want transactional speed. Liquidity is king.
T+0.
Right. T+0. Like that is the goal, which I don't know that Bitcoin solves that. It might solve a lot of other things.
I have another question for you. So Bitcoin sucks, we established. So what do you think is up with like the WAGMI and DApp holding up so well?
I like that, actually. I like that question because you're saying the miners of crypto are doing better than the crypto itself.
I keep getting involved in WAG. When you say WAGMI, tickers WGMI. I don't know. Or maybe they're not mining Bitcoin anymore. Maybe they're just crypto miners. The ETF is called Bitcoin Mining ETF. I don't know. I don't listen like Dave. I think he mentioned it earlier. But yeah, pretty clear. I don't research a ton of companies too deep. I don't know, sitting on a conference call. So I don't know, maybe they're not strictly Bitcoin miners anymore. But yeah, I don't.
Well, even like, okay, so the largest weighting in WAGMI, WGMI, is IREN.
That's pretty good.
All right. So IREN, are we really crypto, or because IREN is energy and infrastructure for AI? Like when we talk about like NVIDIA chips and things like that, IREN does a lot of the building out of the infrastructure that holds those chips. So is WAGMI really like is Valkyrie going to be changing the name of this ETF in the future because it's not really a Bitcoin mining, it's a just technology infrastructure ETF, like Cypher, Hut 8,
Like
some of those
Cypher,
are
yeah.
true mining, but then you got like Applied Digital, BitDeer, like there's things that are Bitcoin mining, but the largest holdings or the largest holding is IREN, which is not Bitcoin. I kind of feel this falls along the lines of like NVIDIA being the largest holding in a tech ETF. Like, are you saying it's technology is doing well, or are you saying it's semiconductors is doing well? But it's a nuanced thing.
Good point.
Both are true, but we'll see. I don't know if I answered your question there.
Yeah, see, when you look at Cypher, operates industrial scale data centers in the like. That's what I don't know. I see, and this goes back to, and you can, they teased Minervini about it, but I'll be the first to tell you, man. Sometimes I just like the chart.
Right.
Don't dive deep onto what they do. I mean, I know what industry they're in, but like I couldn't tell you, oh yeah, 30% of their top line revenue comes from X and 10% comes from Y. I'm not getting into all that. We don't have time for that.
Well, and I think that's a really important distinction. Is it's kind of like when the quarterback drops back. We got the final, second to final weekend of football coming up. When
Only
a quarterback
football games left, man.
When the quarterback drops back and he has his pre-snap read and then his read as he's dropping back, does he care what the jersey number is of the defender? Heck no. I don't need to sit there and know what IREN's, I don't know if I'm saying that right, balance sheet looks like. Because in the end, price, which is the final arbiter of value, the manifestation of opinion, price contains all the fundamental opinions, rational or irrational, in it. That's what price is. Like you could show up to a farmer's market and someone's buying the grapefruit from XYZ farmer. Do I really need to know the motivation behind that? Like, do I need to know, oh, this person actually needs grapefruit, or they just like grapefruit, or they understand this is a great time to buy grapefruit, or that the grapefruit is some way on sale?
Maybe they're arbitraging it. They're going to go down the street and sell it at a higher price.
Right. Like I get the whole, like, I need a sexy narrative. I need like this great storyline. I understand that. That's the way our lives work, is we love stories. People like to be in their own movies. Price captures all of that. I don't need to be on a conference call. I don't need to understand the balance sheet because
did you sell stocks because of Greenland?
Right. That's a great point.
Greenland. Okay. I don't know, man.
Exactly. And we better touch base on this really quick. Bonds,
yeah, man.
Fixed income.
Not going down. Well, yields are going down. Bonds are going down.
Right.
Sloppy. I mean, they've been in a sloppy uptrend since late October. Yeah. I mean, there is a big gap. If you look at the 30-year, there's a big gap. I mean, this 4.9 to 5% area is something. So we'll see.
I just think it's interesting that has the Fed not been cutting rates since September of last year, and we've seen rates higher since then. So the market knows more than anybody. You and me, people listening to this, the supposed experts at the Fed, the bond market knows more. And when you see convertible bonds doing well, you see junk bonds doing well. And honestly, we had this discussion as a team this week. Did you expect triple C credit spreads to look like they did this week or the past few weeks? I didn't.
No.
They continue to be bullish behavior, risk on behavior, I should say.
And junk versus IES, not too bad.
Well, even high yield, like even if you move just a little up, a little down the risk scale, like HYG versus IEF, like not your triple C crap, but your mid grade, high yield, not bad.
Double Bs.
So it continues to be a market where we've seen a little bit of broadening out. You brought up the breadth piece. We've seen small caps and international do well. And when you talk about international, even emerging markets doing well, risk on behavior. Do we see a return to mags here, like a magnificent 7 here?
I think it's on the table.
It's got to be on the table. Precious metals continue to be on a tear. You continue to see risk on behavior in the bond market. And I'm sorry, I don't know any other discipline where you're able to analyze all these different things, intermarket analysis. If you're not top down, you're not technical analysis. You can be the best fundamental analyst, and you're either going to get caught in the weeds at a micro level, like in the balance sheet level, or some macro narrative level. It's only technical analysis where you can like digest all these pieces of information, keep an open mind, have a thesis, change your thesis. It's only technical analysis that does that. That's why we use it. All right,
so I tell the fundamental boys, I say, you're not putting in enough hours. You're not putting enough hours. It's not enough conference calls. It's not enough K10s. It's not like you're not digging deep enough.
Yeah,
more hours on the weekend.
Yeah, you put 80 hours in, you better put 90 in. Such a good point. I always say that I'm going to highlight the sport of this podcast early in the podcast. But I think there's something about me that doesn't like podcasts where they do the supporters right at the beginning. But I do need to respect the Adaptive Select ETF, which supports this podcast and is listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving the short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. As always, investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. Ian, thanks for doing this show with me again. We probably should wrap it up. We appreciate everybody listening. Please give us a ranking on your platform of choice and also share it with your friends. It's a compliment to us. We thank you.
We're about to go sit through an hour and a half compliance meeting.
Let's do it.
Have a great weekend, everyone.